All right, now let's go to intro to trading. Now, I'm not really a trader. This chapter was actually done by Bill and our team. But in general, when it comes to trading, I'll just kind of speak to this at a high level. Most traders lose money. That's the data backs that up. Most traders lose money. And if you're going to be trading, you should always know your entry and exit before you start any trade. And you should have your rules, right? And you should have a system on how you trade, right? So Bill does Gantt charts, Forrest does trend line. So find a system that works for you and stick to it, right? You can learn how to trade for free. The course is out there. The one that I think is popular, I think it's pip trading. Okay, just give me 1 second here. Let me see if I can find it. Is it baby pips? But even Investopedia has a free trading course, right? Investopedia day trading course. Either that or it should be free. I mean, yeah. So I've heard some traders recommend this baby pips for trading. Okay, so this one, I thought there was a free course. Okay, look, this is not free. So, but I mean, I'll just buy the book. I mean, the book kind of covers that at a high level. But use TradingView for trading, right? So if we go to TradingView, if you're a trader in crypto, TradingView is the best tool to use. So look, let's go to Bitcoin here. All right, so trading is basically about momentum, right? At a high level, you have different indicators you can use. Without getting too advanced, you have moving averages, basically taking the price. You have a simple moving average and an exponential moving average. The most common moving averages that are used, I believe, are 50 and 200-day moving average. But you essentially want to ride the trend when it comes to trading. You want to you ride the momentum. Now, this is pretty much one of the reasons why we built Token Metrics. So you don't have to be an expert trader. If you come here to our technical analysis, we'll tell you when to get in, when to get out. Right? So for example, we call the Solana trade. So if we go to Sol and go to technical analysis, right? Basically, all this was using our AI. It turned bullish on Solana at 35 bucks and got out at 200 bucks, almost a 7x return on a trade. This was a swing trade, right? A swing trade over several months, right? So when you're trading, you want to make sure that you know what time horizon you're trading. Either you're day trading, a day trader, they buy and sell each position within 1 day, basically in less than 24 hours. They never hold anything overnight after they're done trading. Or be a swing trader. A swing trader will hold a position over several days, but in theory, they also don't hold for too long. They aren't value investors, right? A trader essentially could be somebody who holds for as little as seconds to minutes to as long as weeks to a month, maybe even longer. But for us, look, for example, we have a low frequency trading strategy. This is designed to not trade as much, right? To help you capture these large rallies, but to also help you get out of any crashes, right? So if we go to view profit and L, okay, so if we go to high frequency, this one does a lot more trading, but with trading, you have to factor in the trading fees you have from trading, because that does cut into your profit and loss. But if you're trading a lot, you could also get out of a huge crash, right? Then you have margin trading. Margin trading is dangerous. I mean, that's basically all I have to say on margin trading. Unless you're a pro, don't do margin trading, because margin trading, you can be right and still get wrecked, right? So for example, I have a story, a friend of mine who shall remain unnamed, because in crypto, I mean, crypto will wreck you. He was trading on margin, Tron, TRX, of all coins. He was trading it literally put in the order, walked away to go to the bathroom or whatever, came back, he was liquidated because Justin's son had tweeted something that basically liquidated everybody. Now, to a point that he thinks Justin's son did that on purpose because he was looking at the charts and knew what traders were doing and wanted to just wreck them. And so if you're trading on margin, if you're going to do it, I mean, make sure you know what you're doing, read up on it. If anything, manage your position. If anything, don't trade more than 1x leverage. I know people who trade 100x leverage and just get wrecked. And when it comes to options, same thing. If anything, I mean, options, our team has been looking into out of the money put options, basically buying insurance. Options, futures, all that. I mean, I would just read the book. That's a very technical topic. And it's not my forte, so I don't want to speak on too much. But just learn to manage your emotions, learn how to hedge, have an entry and exit, know when to get in and get out, essentially, before any trade, and have a system. Remove the emotions completely out of it. And that's what I would say about trading. Okay, all right, let's move now to how to evaluate crypto technology. How to know if a project is real or not, right? So essentially, it's similar to fundamental analysis, but this is based on the actual technology, right? So at a high level, we have the following categories of tech in crypto or blockchain. You have layer 1 blockchains that are built for people to build upon. Like they're the first base layer. Then you have layer 2, which are other blockchains being built on. For example, you have Polygon being built on Ethereum, essentially. Or you have what are called infrastructure projects. These are protocols. These are not applications. These are designed for developers to use and develop that work with layer 1 blockchains, right? So an example could be a protocol like Chainlink. Chainlink brings smart contract oracles, for example, right, to Ethereum. And then that can be integrated with applications like Uniswap and DEXs. So historically speaking, layer 1s make the most money. So Bitcoin's a layer 1, Ethereum, Solana, Cardano, like anything that developers are building applications on, historically speaking, they've had the best returns on investment. So if you're looking to review those projects, look into that. But how do you know what's good and what's not? Because without being a developer, it is very, very tough. And the first thing we have to look at is GitHub. Because crypto is open source, we can go to GitHub and look at the code, right? But without being a developer, what do you actually look at? You can look at the data, at the analytics, right? So if we come here and look at a project like Ethereum, this is their GitHub page. And if we come here and look at insights, we can see how developers are voting on what blockchain will do well. So if we look at the last activity for Ethereum on GitHub, the open source repo, right, repository, this shows us how developers are actually interacting with Ethereum, right? So we have 29 authors that have pushed 47 commits to master, whatever that means, right? But let's skip that. Let's go to contributors, right? This is the activity in terms of how many people are updating or committing code to Ethereum, right? So we see the activity was early back in the day. It's kind of slowed down, right? But the two most important factors, although these somewhat can be faked, but it's still a good threshold, the number of stars, right? So basically, how many people have favorited this repository? Basically, how many developers are watching this too, right? So we have 34,000 developers. Actually, I think we have this data as well. If we go to technology, right? So here we have basically how many people. So Ethereum has 34,000 developers watching it. Solana has 6,300, 6,000 basically, right? And then forks I mean, I'm sorry, stars. Basically, how many people have bookmarked this. Then we have forks. How many developers have taken this code, forked it, meaning that they've copied the code and are now building something new with it. So Solana has 1,300 forks. Ethereum has 12,700 forks, right? Then going back here, watchers. How many people are actively watching all the updates on this, right? And then how many people are actually contributing, right? So 215 watchers, 231 contributors for Solana. And then this is just for us, just for Token Metrics. We've gone through and we've automated doing code reviews, right? So we try to automate everything. That's kind of what a platform does, right? For example, the bugs, security reviews, and all this, using our software, we go through and do what's called statistical code analysis. And we try to automate and make this as data-driven as possible for anything that's open source that we have access to, right? So, for example, if we go to Solana stats, let me pull this up here in different repository. Okay, that is not loading for some reason. Okay, I'll just go back to Ethereum, right? So we had commits. Then one thing to also do is, these are the most active developers for Ethereum in the last 1 month. But I'm sorry, no, most active since Ethereum was born, it looks like, since 2014, right? So Jeffrey Wilke, co-founder, video game developer, co-founder of Grid Games and Ethereum and Gopher. Okay, based in Amsterdam, right? So you can go through and look at the developer activity and their history to see basically how reputable are the developers. Right? Ideally, you want to have somebody who has a long history, right? In terms of coding Ethereum, right? And then if they form any new projects, that's a pretty good sign, right? So if you go to the profile here, we have all the different projects they've worked on that are open source. We have their followers, right? So 1,200 followers. So he has a pretty large following for developers on GitHub. He has achievement here, whatever that is, but he hasn't really added any code in the last 1 year. Then same thing here. Okay, so looking at this guy Peter is pretty active, right? He's had 638 contributions in the last 1 year. So mainly commits, half of them are commits, 28% of pull requests, code review, and he's active on Ethereum, as we see here. And so basically, I mean, at a high level, without being an expert, right, in coding, just look at where the developers are going, right? Are there developers that are bookmarking this project? Are they forking and building on top of it? If we go here to community, again, not much there. Commits, right? This shows you the frequency of code commits. Right? So ideally, you want a project that is being actively developed on. You don't want a project that has not had developer activity in years, because that means there's no innovation being done on that project. Now, that could be fine if it's a project that's a currency that's done, for example, like a stablecoin, for example. But some projects do need actual innovation, right? So for example, let's look at Litecoin, right? This is why Litecoin gets a bad rap. First of all, the founder left the project back in 2017 because they didn't want a conflict of interest. Yeah, where is Litecoin? So what you can do is you can go to a project like either our site or CoinGecko will typically have the GitHub repo. Yeah, so this is their GitHub Litecoin project. Okay, so this, we don't have any insights for this. Okay, we have 8 people that are working on this, cheerleading. But not really getting much. Let me see. Okay, let's go to Litecoin over here. Okay, yeah, here we go. So look at the stars, the forks. So I mean, this project has been forked so many times. But if we go to the commits, Not many commits. 0 commits. 0 innovation since it goes back to the whole year, basically. Nobody has updated Litecoin the whole year. All right, if we go to code frequency here. So last time Litecoin got any update was 2019. Is that a project you want to put your money in? I mean, why put money in a project like this when 31,000 other people are forking the project and innovating on that? All right, so if we go to forks, I think I have to log in here. Okay, all right. But yeah, I mean, so in general, you want projects that are being actively developed on. You don't want a ghost project. So first rule of avoiding taking an L when it comes to technology and crypto, avoid projects that nobody's working on anymore. Basically, they're abandoned projects. So you can check by looking at the GitHub activity. Ideally, you want a project that is actively being developed on by by commits. Then you want ideally a project that has well-known developers working on it. And I mean, for the most part, if you do that, you will avoid most of the L's. And then I would just say leverage token metrics and our code reviews. But at a high level, that's the basic stuff you have to do when looking into the technology of a project. Now, what if a project is an open source? That's where it gets tough, right? That's where, I mean, it's really, you have to look at the background of the developers, right? So let's say we have a project that is an open source, but we can find the developers on GitHub. Our blockchain engineer team will go through and research their activity on the GitHub and see the code quality. Do they write good code? Is it well documented, right? Do developers actually want to use this? Those are the elements we would use.